Good evening, I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening, today is Monday, March the 31st, 2014. It's 20 minutes to 10 p.m. time in Toronto, and this video is our daily review of all the 11 markets I follow. This video is valid for tomorrow, April the 1st, 2014. Let's start from the euro dollar, which is the chart that you see on the screen. This is the daily chart, and you will remember on Sunday I mentioned this level of support, which was already tested on Friday, and I mentioned that there were two possibilities: just a continuation lower for this market, or retrace into the next measure move in this sequence lower that we're seeing. And actually we saw this measure move trading here, and the 138.010 held here in this market. So I'm still waiting. I'm still anticipating a continuation lower into and through this level, this area of support here. So let's see what the price will give us tomorrow. If we look at the 15 minutes, we see this level of support here. So below 137.53, there is a possibility for an entry short here with a stop above highs. Moving to the SP 500 D-mini futures, we had a resume of this move higher. Actually, we had a violation of shorts here and then a violation of longs. So this market is actually moving laterally, and we don't know if it's going to be a still we don't know if it's going to be a reversal formation or a continuation formation. And we have a second target above previous highs as well. When we move to the 4-hour chart here, we can see that at the moment we had a measure move on the 4-hour chart that actually worked quite well on Friday, and there was a continuation higher into first target today, as you can see here. And now if this market corrects, there's a possibility for a trade into the next a measure move long here, and this would be a support at 1856. Moving to the dollar index, the daily chart. Actually, this market went to test once again the all the way halfway back from highs to lows, and this is a short level. Now, doesn't mean that this market is going to move lower. We know that first of all we have to confirm. And the only confirmation will come only after we we actually break this 79.83. And by the way, we should use the previous trace here, which is from lows to highs. So only if we break this 79.80 level, then we can actually confirm this area of resistance here. I still believe that the dollar can keep moving higher, and if we retest this level, this retest might be successful. So let's see what happens. Moving to gold. Gold never traded that next measure move that I showed you yesterday in the weekly review, and in fact we had this sequence of measure move from lows to lows, which progressed into 1310 and then 1295 here. And yesterday I was looking for a retracement into the next measure move in this sequence lower, and this will actually be lows to lows. As we could see here, this level, the 1302, 1303, never traded. So I'm going to trace the next measure move in the sequence here based on the new lows. And if we get participation at this level, and we go back to 1299 here without never piercing this 130460 70 level here, there is a possibility for a continuation lower above 1305 here, 130470. This level of support, this area of support is confirmed, and we can actually see a continued move higher in gold. Moving to the US dollar versus Japanese yen, this is the daily chart, and this market, you will observe that we just continued moving higher, so there is a possibility for this market now to move into the second target of this measure move. The first target, although a little bit sloppy, this measure move worked and brought price into 103.03, which is just below the 103.09 level that we have been watching. Actually, this area of resistance has been violated already. So after a recent move, this area is not there anymore, and so there is a possibility for this market to continue into 103.60. If we get there, we are going to use this anchor to chase the next measure move. To keep framing price higher price here. Moving to the euro versus Japanese yen, very similar situation. Here the violation came actually today, so this area of resistance again is not there anymore, and as we can see, this market is actually traded this 140, which I've indicated in the last few days to the pip, and it now has a target at previous sizes, as you can see. Now, when we move at the 4-hour chart, we can see here that if we get a retracement, this retracement could actually come down into extension level. So this is the level that I'm going to watch. If we get into 141.50 60 area here, and we never breach below 141.30 level, there is a possibility for a continuation higher, and so this becomes a long entry, a very clear trading plan, and a first target at 143.08. Pound versus the Japanese yen, similar situation. All the Japanese majors are in the same situation. As we can see here, this market also traded the old halfway back with an area of support starting at 168.74 and a stop below 167.58, which was never breached. And we also saw this market moving higher, and again also this market could actually correct on the daily, and in this case there are two main levels we should consider. One is definitely the continuation from this measure move higher, which I showed you in the past days, and this could actually be an extension. So if market comes back and never breaches this 171.07, then there's a possibility for a continuation higher right at these levels. There is also a possibility of larger correction here into a lower anchor. So we need to be careful, and maybe the right trade here would be for continuation. We would be buying 171.25-30 area and putting a stop below this second level 170.64. And moving to the pound versus the US dollar, you know that I'm bearish in this market. If you want to know the reason, just subscribe to the newsletter. It's free, and I provide every weekend a weekly review in which I start from the larger time frame and explain why, and also this Sunday explain why I'm bearish about this pair here. And on the 15 minutes we had quite a very good sequence of measure moves, so this helps us quite a lot because it allows us to apply the Fibonacci stalking technique, which is a technique to procedurally test level of resistance and support. In this case, we have a level of resistance, and you can see here I'm chasing the sequence of measure moves higher, and when this sequence will fail, as we are within an area of excuse me, an area of resistance, this will be the confirmation of the next move lower. So as you can see here, the next measure move with support at 166 actually worked and worked very well. And now the next measure move is going to be from these lows to highs here. And if price moves below 166.28 tomorrow in the coming days, this will be for me a confirmation of new shorts, and this will be an entry with a stop above previous recent highs here, the highs that we saw today above 166.84. So there's still a good opportunity here. The Australian dollar on the other side did confirm the next measure move long. This is very interesting. I've showed you again. Please review the weekly newsletter. If you subscribe for free, you'll receive the last six newsletters with all the analysis in the last 6 weeks. And those who follow me will remember that I modeled the last move higher in this market from as a measure move from lows to highs here, and initially we didn't get participation. This 08982 failed and we were within a wedge here, but then eventually this level 09011 started working. And also remember that we had this continued move higher here, and as you can see, this 01911 progressed into first target 09192 and second target 09286, where we start seeing some profit taking. And yesterday I mentioned the level of support that today worked beautifully. This was a continuation higher and extension, and as you can see here, program trading found supported this price here. At least so far it's supporting this price, so we would need to see whether price is going to be pushed higher into this first target and then eventually bringing this level. If we break the this setup here, so we move below 191.94, then there is a possibility for, well, not a possibility, that then this whole move has failed and we will go from lows to highs here midway. The US dollar versus the Canadian dollar is still continuing this consolidation on top of support 109.15. I believe that the fate of this market is related to what the dollar is going to do, so we might see a continuation lower, or as I mentioned also last week, after this move lower in the last few days, we would see a retracement into the next extension. And actually, as you can see, this level is very close, but we didn't trade it. So we could get into 110.88 and then again start correcting, or we could just break this level, in which case this price is going to move into the highs to lows here, and this is going to be the next level that we watch if we move above 111.09. And finally, the New Zealand dollar versus US dollar. Here you will remember that I provided this trade. It worked very well. This with 2 days in advance. This is an extension continuation long 085.15, with price reacting at this level twice and then getting into the first target. Now this is not visible here. I'm going to change the scale for you and show that we hit actually to the pip the first target. We have the second target 87.45 above current price, and this is the first target of this setup, daily long setup here. So there is a possibility for this market for just a continuation higher. If we correct things that which I'm not expecting here, because this target is very close, and typically program trading will do whatever it takes to bring price into targets. But should we retrace, that's the next level of support is going to be this 085.44, the possibility of an entry with a stop below 085.08. This is it for today. I hope you enjoyed this video. This video is valid for tomorrow, April the 1st. I hope you started well your your week trading week here. If you want to want to get the weekly review for this week, just subscribe the newsletter. It's free. It only takes a few seconds. I hate spam as much as you do, and I will not use your email for other purposes. Thank you thank you very much, and I wish you a very good evening and a great trading week next week. Bye bye now.